What's going on, people? Back with a bang. This is the Money Management, back here with another video for you guys today. So in this video, we're going to be looking at why you are losing money with options. Now, this is a video that I think a lot of people will probably not watch, but they're supposed to watch. And it's pretty much just some simple tips and tricks that you guys can avoid, common mistakes that you guys are probably seeing or you guys have done before or you guys still do. And it's going to help you with your long-term options game. Because let's be honest, we all want to make money in these markets. We want to make money with stock options. But there's a reason that sometimes you don't make money. There's a reason sometimes you take heavy losses. And we're going to cover those points today. So I do want to start off by saying a lot of you guys are going to be able to relate to these topics, to these points, to these issues that I bring up. But you're still going to go forward and do the same mistakes. And that's what we've got to try and avoid, breaking out of those bad habits. So to start off with, I'd like to say the first mistake is not dropping a thumbs up, not commenting, not subscribing and not sharing. So make sure you guys get all those nice things out of the way. It doesn't cost you anything. Those are completely free. Now, on to the topic of today's video. Let's get into the real mistakes. The very first thing I'm going to say, chasing. Chasing, this is probably the most common mistake. Is it too late to... The moment people are saying, is it too late? Usually, it is too late. On the other hand, if I say, grab an option at, $1, and the next day you grab the option at 75 cents. That is not the definition of too late. The definition of being too late is when you see a stock shoot up 5% or 4% or whatever percent it might shoot up, and you start asking, is it too late? Yes, it's obviously too late. Do you want to get caught chasing? I highly doubt it. Let me give you a good example. When AMD or Pfizer or even AMC shot up this week, you would have not been in any call options and you would have said, is it too late? Yes, it is too late, because you know what's going to happen? AMC is probably at the top. Pfizer is probably at the top. It's probably at $51. AMD is probably already at $109. And you're asking, is it too late to get in? Well, yeah, it probably is. And when you start to try and chase these plays, that's when you lose money, because they're already at the top, or they're way over bought, or they've already popped off, and you're trying to get in after they've already done the hard work. When people are already starting to sell and you're trying to see, should I get in? People have already taken their 40%, 50%, sometimes even 100% returns, and I hear this question, you should know you are chasing. And yes, it is too late to get in. Next one, the stop loss or the stop limit, whatever you want to call it. Basically, you buy an option for $1.50 and straight away it starts dropping. $1.30, $1.20. Before you know, it's at 60 cents. If you have a stop limit at, $1, once it drops from $1.50 down to $1, it hits your stop limit, it will automatically sell it for you. Now, I have heard that there's been some weird stuff happening on Robinhood with this stop limit, but usually what's supposed to happen is if I buy a stock at option at premium of $1.50 and it rises to $2, I might put a stop limit at $1.75, saying if it falls to $1.75 or below that, I would like to sell my option. Now, your order should obviously get filled once you place that. But again, I'm not sure what's happening with Robinhood, but I'll try and show you guys on screen as well, what exactly I mean by this. So we have my Tesla option here, right? And in this case, what I'm telling you guys to do is set a stop limit. So I would go to trade, sell, because I'm already in this play. I'll go to settings and I'll put a stop price. Click on. I'd sell one contract or however many contracts I have. I would put a limit price. Now, you just select what limit price you like. If Tesla falls below that limit price, it should automatically sell your contract. I know Robinhood likes to steal money, so you've got to be aware of that. Sometimes you might need to keep your eye on it. But yes, indeed, you can set up your trades to sell when you're not able to sell them. Actively be looking at the screen if you're at work or whatever the scenario may be. Yes, you can set up your trades so you can get out when you need to get out. The next thing I want to cover is having a plan. You go into an option and you say, hey, I'm buying this option. Do I know why I'm buying it? Do I know how long I'm planning to hold it? Do I know how much I'm going to sell at? Am I going for 40% profit, 60% profit, 80% profit? Am I going for just a small profit, get in and get out kind of trade? Am I, gambling on this trade? Is it kind of a lotto play? If I make money, I'm happy. If I lose money, it's okay. You need to know what exactly you're doing, and that's why I say go in there with a plan. Too many people, I see it all the time, go into a trade not having any idea about what they plan to do. I see people trade something and they're up 120%, 130%, and then they end up losing money on it. That definitely cannot happen. But that can happen if you do not have a plan. So it's why I'm saying you should get a plan. You should have a plan when you enter a trade. Everybody goes into trades for a specific reason. If you don't have any reason, you shouldn't really be going into that trade. Yes, people take call outs, people take alerts. I understand that. But you still have to have a plan. You can't just buy the option and then just hold it forever. If expiry is tomorrow and you buy an option today, do you just plan to hold it until expiry and hold it until market closes? Well, that's up to you. But you cannot just go into options, Pfizer, for example, buying a load of contracts and then not knowing when you're going to sell them. If you say to yourself, okay, I'm up 125%. This happened with me with AMD this week. I was up 130%, and I said if it starts to drop below 75%, it started tanking. I said if it drops below 75%, I told him on a live, I'm going to sell out. It dropped to around 120 from highs of 160 or 170, and I sold out there. It's fine. Later on in the day, it climbed back up to 135, but that was my plan. I had a plan to sell out once it got to a certain level. Now, because I did that, I took away profit. On another day, if I had no plan, I would have let it fall away and said, okay, when it starts climbing up again, I'll sell. Then once I saw it climb up again, I would have said, you know what, it's going to go up more. I would have ended up not selling. And after AMD dropped lower, I would have not sold and I would have held on to something which almost, ends up being a loss. That's why you go in there with a plan. Same with every single option trade you make. Have a plan. And that kind of rolls me on to the next point, being greedy. You are losing on your options because you're being greedy. You want 40% and you get to 40%. You want 60%, it gets to 60%. You want more and more. You're trading, I don't know what stock. You could be trading Facebook and you say, I want Facebook to hit 362. It hits 362. Then you say, actually, you know what? I'm still in this option. It expires in 3 days. I want Facebook to hit 365 first. Facebook gets close to 365. It hits it. You say, you know what? I want to see 370. I want my option to bring back 500, 600, 700%. As the days go by, you forget that theta is eating away your option. You also forget that, by the time expiry comes, you're going to have to sell anyway. You're not locking in profits. You're not going in there doing anything. You're being greedy. Facebook drops 2% or 3%. The stock itself drops the day before your expiry or the day of your expiry. You see your option start selling off. You panic, and because of greed, you might still hold on to that option. I've seen it before. Because of greed, you might hold on to it. And because you don't sell out there, you're stuck. You're now holding something which maybe becomes a loss again very quickly. Why else do people lose money with options? Another one, buying too short-term a trade, not giving yourself enough time. It's a Thursday and you want to buy a trade because a lot of people are hyping it. You want to buy it, you want to make some money before Friday. You've had a pretty mixed week, a rough week. You need to make money before Friday. You go in there, you buy something which expires tomorrow, obviously high risk. You put in 40, 50 bucks, you lose it all. It's possible. Sometimes you put in 150, 200 bucks. Sometimes it's even worse. I've done it, same day expiry. Buying contracts for 200, 300 bucks, expiring, and you're selling them out 10 bucks, 5 bucks. Purely because you're buying too close to expiry. Options are exponential. They decay. There is time decay on your options. Those contracts go like this. They become less valuable. That's why you need your stocks to run up quickly. So if you're buying something which expires tomorrow or expires next week, you need your stock movement to happen very quickly. You've got to remember that. Most option traders, the most successful option traders, trade with longer periods of time. You might see the best option traders trading with 90 days till expiry and way in the money contracts. And if you say, yeah, that's way too expensive, that is why it's safer. That is why they're making money. It's better to buy just one of those if you can afford them than 5 or 10 which expire this week and then you're hoping a stock moves in that direction. You're hoping stock booms. That will not always be the case. Now there's just a few different tips which could be why you're losing money with options. Another tip, which is the final tip, is because you haven't got the stock option starter pack, which you guys know is in the description. The link is in the description. We've had many people grab that. The feedback has been great and I would honestly recommend it to you guys. It is 10 videos. It helps you guys knowing what the bid ask is, knowing what buying calls, selling calls, buying puts, different trading strategies, all the things which are useful to help you succeed with options. So please do check it out. Again, if you do any of the things I mentioned today, you want to break those bad habits. You really want to start getting good at taking your wins, taking those 20%, 30%, 40% gains and leaving and moving on. Doesn't matter if it runs up another 50%. If you're looking at the charts and you see it running up and up 50%, sure. If you don't know what you're doing, you definitely need to be taking those 20%, 30%, 40% returns. If you have no idea about a stock and you're trading it, you definitely need to be taking those small wins, because those small wins add up. So always remember that. Please check out all those other links in the description as well. You guys know the drill. There's a stock option starter pack. Once again, we've got the Investing Academy. We still need a few more people to sign up for that. We also have free cryptocurrency through KuCoin on Coinbase. You can also sign up for Robinhood and get a free stock there as well. But thank you guys so much for watching this video. Be back here next time for another video. Stop losing money with options. You guys have heard it from here now. So make sure you guys go out and use these tips. I got money to making. You got money to making. See you guys next time for another video. Peace.
Game.